Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
I think there's some things that kind of are encouraging. I see the VIX starting to relax a little. VVIX has been coming down. It's under 100 now. That's good. VIX 9-day versus VIX 9-day is finally under the VIX, right? So it's spent a great deal of time, which shows you a backwardation, a kind of inversion that shows you that there's a lot of fear out there. So we've taken a lot of the fear out of the gauges that we watch quite a bit. That doesn't mean we're done, right? So there's clearly a lot going on. So I think this is an opportunity for people to revisit hedges if they were lucky enough to
take. He is asking about that. He's specifically asking you in Q&A, Hans, how do you structure multi-leg VIX option strategy for hedging, thinking ahead, vol event risk, and realized vol may ease post-VIX expiry, which is next week, and NVIDIA earnings, which is 28, and month-end flows. But I really think July is where we start to get busy, and that's not usual. Usually July, August are deader than a doornail, like we've had the past few weeks, where volume has just been sucked out of the room. There's just been, I think we're going to have something happen in July. So that's my timing.
Yeah, it's very calm. And I think when I hear you talk about zooming out a little bit, I always love that because we can all get caught up in the noise and maybe even start forcing trades, right? You get into these, we've come down from an ATR of gigantic amounts compared to that we haven't seen in 15 years to things just normalizing to some extent, if you can call it 25 VIX normalized. So we've normalized a little bit. So you have to adjust your trading, adjust your viewpoint to the market that's in front of you. Don't force things. And it's okay. Zoom out with Samantha. Just go, okay, we need to see some things develop here. And you'll see it. I tell people this all the time when they start to struggle a little. I say, listen, just sit on your hands for a bit, reduce your size, right? If you're trading X amount, cut it to half, cut it to a quarter, get that size down, start getting your confidence back, and then start pressing when things go in the right direction. It's amazing. One thing I always like to say is that P&Ls as traders can be tracked as well, right? There are trends. They move in trends. Playing poker goes in trends, like craps, everything. Everything works, has trends, trend following embedded in it. So recognize when the trend changes, size down, sit on your hands and zoom out a little bit and go, okay, what's the next big thing here? We've just come off of a hell of a football game over the last month. Let's think of what we have to do to get prepared for the next one. For now, it's playing the compression and implied volatility. It's a little bit of theta, and it's starting to look for some hedges again. So if I look at the VIX term structure, so I was going to show if you look at, I've been mentioning some of the fear gauges that have come down a little bit and are somewhat encouraging. Some are not really there yet. So there's clearly still, even though don't let the market lack of volatility fool you, there's still some embedded worry. Now, some of it could be an echo from what we just went through, right? That's natural that things just don't completely go back to normal right away. But right now, we can see that the VIX term structure is still not that happy. Flattish, but not really. I'd like to see it flat as flat, and this is not quite flat. So May is going to be coming off in a bit. So focus more on the June, July, August. And it's really not in a happy place at the moment. So what that means is you probably have a little bit of value in upside VIX structures. Some of the things that we talk about, the ETNs, the SVIXs, SVXYs, they're going to struggle in this kind of environment because it's not there. So some people get confused by those. They feel like, why aren't they doing better? They can make money quickly on a big curve drop, right? As vol comes down on a 1-day, 2-day event. But ultimately, they need the roll yield structure to work for them. And right now, they're not working. So short vol isn't really working. And it's because of this specific way that they're made. This is not VIX. This is the VIX futures and the way that they roll themselves to oblivion most of the time. Right now, it is a positive for long VIX products. And along the same lines, you could look at something like a VIX, put yourself out in July. June is maybe a little bit short. Maybe we don't get too much happening unless you start to see some reason, maybe some breakdown on the chart, some reason to think that we could have some follow through. Then positioning in something a little bit more near term is going to give you that bigger reaction, that gamma, right? You want to make that money quickly, and you might position in a June. But for now, with things drifting up, you want to use one of the only things that you can control in our world, which is give yourself enough time for something to play out. So I'd position, you could buy a 26, look, you can buy a July 26.50 for about $2. That's a pretty darn nice spread. And July is still very underwater. So you could put on some nice structures that don't cost a lot. And if we do get a little bit of shaky to the upside in the VIX again, those could pay quite nicely. And then to the downside, and the reason they pay well is that you structure those is because you'll notice that the implied volatility rises, right? So think of this as the opposite of S&P downside puts. What happens? The at the monies trade at, say, a 20 implied volatility, and the way out of the money puts trade at a 30. It's a huge difference. 50% more implied volatility. That's that skew. VIX is the opposite, right? Because downside in S&P is upside in VIX. So you get those higher and higher implied volatility levels, which means you're getting 80 cents for this instead of what it should be worth, which is 15 cents, right? So you get this nice spread for less money, and that can help you play some of that downside. So that might, yeah, that's one way to do it. And then you could certainly go into something like the Qs, if that's where you think the weakness, if that's certainly where the weakness has been, perhaps in IWM, if you don't think those rate cuts are coming in the way that markets expect them to, that is not going to be good for IWM. I've been watching that chart.
I think you know my position on small cap.
Yeah, you have nailed that for a long time. And
There's
I have to
no
admit
reason. There's no reason until we get a big sell-off. Small caps will outperform. Supply chain impact that's coming this summer is not going to show up in the early prints that we have of PPI and CPI. This is all lagging data, just like jobless claims spiking higher is actually lagging data after severance pay runs out. So some of this has to be a little bit anecdotal, if you will. Surveys are a mess. Hard data is not. And hence the Fed can say we will be reactive, not proactive. But the market is losing more and more of its levers for policy intervention. So right now we've got those puts covering, which is the point that Spot Gamma was making. And that's really the reason for this support, speaking up trade deals. But until we actually get any of this, we really have a much higher possibility of basically buy the rumor, sell the news. So as we grind higher into the end of May, and then even if it's good news.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here and subscribe to LaDucTrading YouTube channel for more content.